Stock market today. Stocks mixed amid inflation fears. U.S. Treasury yields jump. Double-digit inflation rates in Europe have clipped early market sentiment Wednesday, but solid earnings could keep Wall Street's two-day rally on the rails. U.S. Stocks edged modestly higher Wednesday, with stocks looking to extend their two-day rally in the face of another set of disappointing UK inflation data that clipped investor sentiment and pushed the dollar deeper into the green against its global peers. Britain's September inflation rate jumped to a fresh 40-year high of 10.1% last month, official figures indicated Wednesday, in a move that is likely to trigger faster and deeper rate hikes from the Bank of England. Ordinarily, markets would glide past regional inflation readings, but with the BOE poised to begin selling bonds from its multi-trillion balance sheet, and the government still in the chaos following the scrapping of its weak-souled economic plans, investors are worried that Britain's inner turmoil could spill over once again into the broader financial system. The U.S. dollar index, which tracks the greenback against a basket of global currencies and often acts as a proxy for broader risk sentiment, rose 0.47% overnight to 112.660, while benchmark 10-year Treasury bond yields added 8 basis points to change hands at 4.11%, the highest since 2008. That left investors in a relatively defensive mood heading into the Wednesday session, with housing and mortgage data due before the start of trading and third-quarter earnings from Tesla and IBM expected after the closing bell. The Bow Group's key volatility gauge was also on the move, rising 3.2% from yesterday's levels to 31.48 points, suggesting daily swings of around 73 points over the next 30 days for the biggest U.S. benchmark. The Mortgage Bankers Association published another jump higher in benchmark mortgage rates, which came in just below the 7% level amid a rise of more than a full percent since early August. Government data also showed an 8.1% slowdown in housing starts, which came in at an annualized rate of 1.439 million units, as projects are delayed amid the ongoing surge in building costs and the pullback in demand linked to higher mortgage costs. Oil markets will also be in focus Wednesday with the Energy Department's weekly stockpile data, which showed a 1.7 million barrel decline over the period ending on October 15. As well as the details of President Joe Biden's plan to sell off the remaining portion of crude taken from the 180 million barrels taken Strategic Petroleum Reserve earlier this year. WTI crude futures were marked 43 cents higher in early Wednesday trading at $83.25 per barrel, while Brent contracts for December added 59 cents to $90.62 per barrel. On Wall Street, the S&P 500, which has gained 6.3% since Thursday's open, was marked 7 points lower in late-morning trading while the Dow Jones Industrial Average gained 60 points. The tech-focused Nasdaq was down 30 points. Netflix, NFLX, shares surged 15.5% after the streaming and media service shocked investors with many better-than-expected third-quarter earnings ahead of its ad-supported platform launch. Tesla, TSLA, shares rose 0.9% ahead of the clean energy carmaker's third-quarter earnings after the closing bell. Tesla is expected to report a bottom line of $1 per share, up from 62 cents over the same period last year, on record revenues of $21.96 billion. United Airlines Holdings, UAL, shares, meanwhile, gained 7.6% after the carrier posted stronger-than-expected third-quarter earnings while forecasting firmer end-year profits thanks to the ongoing boom in global travel demand. Procter & Gamble, PG, gained 2.65% after it posted stronger-than-expected first-quarter earnings but clipped its full-year sales forecast owing to currency headwinds linked to the surging U.S. dollar. Stocks in Europe were lower, with London's FTSE 100 down 0.27% on the session and the region-wide Stoxx 600 falling 0.5% in early Frankfurt trading. Overnight in Asia, Japan's Nikkei 225 ended 0.37% higher as the yen fell to another 32-year low of 149.184 against the dollar, while the MSCI Japan index fell 1.11% into the final hours of trading.